You have been lied to your entire life about what charity actually is. Not slightly misled, completely lied to. Every time you see a billionaire standing on a stage announcing they are donating billions to charity, the crowd applauds. The media celebrates. The headlines call them generous. And somewhere in a room you will never enter, their accountant is smiling. Because that donation did not cost them what you think it cost them. In fact, in many cases, it made them richer. And the most disturbing part? You paid for it, not metaphorically. Literally, your taxes, your government's budget, your generation's schools and hospitals and infrastructure, subsidizing the private foundations of the wealthiest people who have ever lived. And it is completely legal. In fact, it was designed to be. This is the story of the biggest financial trick the ultra-wealthy ever pulled. And by the end of this video, you will never look at a billionaire's charity announcement the same way again. How it started. To understand why billionaires create charities, you need to understand one number: 37%. That is the top federal income tax rate in the United States. In many European countries, it is even higher, which means that for every $100 a billionaire earns, the government takes up to 37 of them. And billionaires hate that, not because they need the money, but because losing control of money even to a government goes against the fundamental instinct of every person who has ever built extreme wealth. So over decades, they did what wealthy people always do when they do not like the rules. They found a way around them. And the most elegant way around paying tax was to create a vehicle that looked generous on the outside, but functioned as a financial fortress on the inside. That vehicle is the private foundation. And once you understand how it actually works, the whole illusion collapses. How the trick works. Here is the basic mechanism, and I need you to follow this carefully, because this is where it gets genuinely outrageous. Imagine you are a billionaire. You have shares in a company worth 1 billion euros. Those shares have gone up massively in value since you bought them. If you sell them, you pay capital gains tax on the profit. Depending on the country, that could be anywhere from 15 to 30%. On 1 billion euros, that is potentially 150 to 300 million euros going straight to the government. But what if instead of selling, you donated those shares to your own private foundation, your own charity, that you created, that you control, that employs your family members, that funds projects you personally care about, that enhances your reputation globally? Here is what happens when you do that. You get an immediate tax deduction on the full value of the donation. You avoid paying capital gains tax on the shares entirely. The foundation pays almost zero tax because it is a nonprofit. And you still effectively control how the money's used. You went from owing hundreds of millions in tax to paying almost nothing, while getting full public credit for being extraordinarily generous. That is not charity. That is financial engineering wearing a charity costume. The numbers that prove it. Let me give you some real numbers so this does not feel abstract. When Warren Buffett announced he was donating the majority of his wealth to the Bill and Melinda Gates Foundation, the world celebrated. What the headlines did not explain is what he got in return: a tax deduction worth billions of dollars, an escape from capital gains taxes he would have owed on decades of investment gains, and his money going into a foundation that reflects his values and priorities rather than being distributed by an elected government. When Mark Zuckerberg announced he was donating 99% of his Facebook shares to charity, the headlines called it the most generous pledge in history, which is not actually a charity. It is a limited liability company, an LLC, which can invest in for-profit companies, which can lobby governments, which can do almost anything a regular company can do. With the tax benefits of a charity and complete control remaining with Mark Zuckerberg, he did not give away 99% of his wealth. He moved it into a different structure that he still controls, while getting enormous tax benefits and global praise for his generosity. What private foundations actually do. Here is something that will make you genuinely angry. Private foundations in the United States are legally required to donate only 5% of their assets every year to actual charitable causes. 5%. The other 95% sits in the foundation, growing and investing, compounding, tax-free. So a billionaire puts $1 billion into their foundation. They are required to give away $50 million per year. The remaining $950 million continues to grow if it grows at 8% per year. That is $76 million in growth. which is more than the 50 million they are required to give away. The foundation actually gets bigger every year, even while technically fulfilling its charitable obligations. And the billionaire gets a tax deduction on the entire original billion. This is not a loophole. This is the system working exactly as it was designed. Who designed this system? Here is the part of the story that connects everything. The modern private foundation structure was largely shaped by legislation passed in the United States in the 1960s, the same decade that the Rockefeller Foundation, the Ford Foundation, and the Carnegie Foundation were among the most powerful private institutions in the world. The families behind those foundations had significant influence over the politicians writing those laws. The result was a framework that allowed extreme wealth to be parked in tax-advantaged structures, with minimal requirements for how it actually gets used, and almost no democratic oversight of where the money goes. Governments gave up tax revenue in exchange for wealthy individuals theoretically directing money towards social good. But who decides what social good means? The billionaire. Not the voters, not the government, not the communities the money is supposed to help. The person who was already wealthy enough to avoid taxes in the first place. The power problem. This is where it goes beyond just tax avoidance and becomes something more serious. The Bill and Melinda Gates Foundation is the largest private foundation in the world. It has more influence over global health policy than most governments. It funds the World Health Organization. It shapes vaccination programs across entire continents. It influences education policy in the United States. It funds research that determines what medicines get developed. All of this power, concentrated in one private foundation, controlled by one of the wealthiest people in history, accountable to nobody except its own board. When a government makes a decision about health policy, you can vote them out if you disagree. When the Gates Foundation makes a decision about health policy, you have no recourse whatsoever. This is what happens when private wealth becomes so concentrated that foundations become more powerful than elected institutions. And the tax system that allows this to happen is the same tax system that your salary is subject to every single month. What this costs you? Let me make this as concrete as possible. Every euro that a billionaire shelters in a private foundation is a euro that does not get taxed. And every euro that does not get taxed is a euro that governments have to find somewhere else. Higher income taxes on working people, cuts to public services, less funding for schools and hospitals, more debt for future generations. The tax breaks that make private foundations possible are not free. They have a cost. And that cost is distributed across everyone who cannot afford to create their own foundation, which is everyone except the ultra-wealthy. You are not just watching billionaires avoid taxes, you are subsidizing their reputations. Every time a billionaire gets praised for their generosity, part of what funded that generosity was money that would otherwise have gone to your government, your schools, your health care, your infrastructure, redirected instead to causes chosen entirely by someone who was never elected by anyone. To be fair, I want to be honest here because this is a complicated topic. Some foundations do genuinely important work. The Gates Foundation has contributed to reducing child mortality in developing countries in ways that are real and measurable. Some billionaire philanthropists genuinely care about the causes they fund. The problem is not necessarily the intention. The problem is the structure. A system where the wealthiest individuals can decide unilaterally where billions of dollars of effectively public money goes. With no democratic oversight, no accountability, and significant personal financial benefit, is not charity, it is power, dressed up as generosity, and the fact that some good comes from it does not make the underlying structure okay. Conclusion. The next time you see a billionaire announcing a massive donation, before you applaud, ask 3 questions. How much tax did they avoid by making this donation? Do they still control where the money goes? And who decided that their priorities matter more than what elected governments would have done with that money? Because the story of billionaire charity is not really a story about generosity. It is a story about who gets to decide what society looks like. And right now, that decision belongs to people who were never voted for, never held accountable, and never had to pay the same percentage of their income as you do. The game is rigged, and the charity was part of the rigging all along. Subscribe and tell me in the comments which billionaire foundation do you think is the most powerful. And if you have not watched the video about the company that owns everything your generation will ever try to buy, click here, because that video and this one tell the same story, just from different angles.